Welcome to Java. Thank you for joining me again. This is May 12th, 2025. It's Monday morning after Mother's Day. There's quite a bit that happened over this weekend. It was not in yesterday morning, but there were quite a few announcements that have happened in the past 12 hours or so. So, quite a bit to cover. Everybody at the moment running into the green, goats included, cats and dogs. Getting along is absolute madness. So, we've got a hurry, fear of missing out. Buy in the markets right now. Let's get into that and see exactly what is going on with this. So we are deep in greed territory, and I suspect after the markets open, we're going to see this needle plunge a little bit more towards the extreme greed as things are looking right now. So that is the daily driver. Absolutely. Markets all going green. We've got Bitcoin still around the 105,000 level and looking stronger, like it's about to make another move up. We've got the dollars a bit stronger. And we've also got the 10-year yield is increasing because money is flowing out of the bond market and into equities or the stock market and risk on. So it's fully risk on environment this morning that we're seeing. Now, the exception to this is we are looking at drugs. Now, this is prescription drugs are down. There's an executive order that is expected to be signed this morning. I believe it's about 9:30 Eastern Time, that is going to pressure for an evening out of the drug pricing. So that is pressuring all of the big pharma. We've also got gold under pressure because gold is a safe haven asset. But we've been talking about the looked like it was getting weak and going to have a pullback down to around 3,100. We'll see if it actually hits that level, but it is headed towards it at this moment. We've got oil is up, and that is because there are a couple of things happening on the war front. We'll cover those. So, right now, really what is happening? Global stocks climbing on China and US agreeing to cut tariffs for at least 90 days. So, this is a type of a pause that they've done, but the stock futures as well jumping on this 2 days of what they're calling productive trade talks. Now, unlike earlier in some of these talks, both China and the United States representatives are coming out to their respective countries agreeing that these were good talks. So the short of it is that for the most part, the next 90 days, the United States has dropped their tariffs down and China has dropped theirs significantly as well, although not quite as much. So US did concede quite a bit more. So, current stock market opening, this is a bit early that I'm doing this. However, they're going to gap up, I believe, and run into the green. We're going to be watching also the Russell going up as well. NASDAQ looks to be leading them. And as I said prior to this, the drug companies, big pharma, are going to weigh a bit on the other indices. So we've got the volatility index is plunging as this is a full risk on no fear buy it environment is what it's opening up to. And the futures are up sharply as well. Crude oil we'll talk about, and then gold and silver under pressure. So calendar wise, really not a lot coming out this morning. However, the federal budget for the month coming out 2 p.m. We'll speak about that a little bit more in a bit. Really, the big numbers for the reports is Tuesday. It's a CPI. Core price inflation. This is what the Fed is going to be looking at as far as possible rate cuts. Although, with what just happened, the Fed is pretty much just put into the back seat. No one really listening to Jerome Powell right now and don't need his cuts to fuel this stock market run. Now, the question is, will this last? The question is, for a brief period of time, for the long term, no. So let's go into a little bit more of this. Now, May is typically a month of issuance. They say sell in May and go away, but there's quite a bit more coming out on this as far as the debt. We're going to cover a bit more of that in a bit. Now, shipping, because of this pause, this has created a race for the next 90 days massive amounts of shipping as everybody's going to try to get their goods into the countries because they don't know what's going to happen beyond that period of time. The tariff pauses could extend, but they also could not. They could increase. But they know if they've got the next 90 days, they've got to get all of these goods across the water. It does take time for this to happen. So shipping companies are expected to have a bit of a boom this morning on all of this news. And they're as well as the dock workers and all of the related with that. Now, we've got Starmer came out in the UK unveiling migration curbs. This is just a bit more news, but that's also going to be positive for them at the moment. Now, we've still got the underlying pressure on the real economy. Nissan had initially announced they were dropping 10,000 jobs. This morning, they just doubled that. So the auto industry still in trouble, and they've got this lag effect that is happening that's going to hurt them quite a bit. We've got United States beef prices. They're extending inflationary surge. Ranchers have the thinnest herds in 70 years. This because of all the pressures that they're facing, not to mention the costs of their water and then also being able to care for their cattle. So we've got inflation continuing. Really going to be watching the core CPI tomorrow because this is functionally at the base of everything going on. So at the bottom of this also is underpinning with energy. We've got Google funding 3 nuclear sites because they are looking forward, and this, you're not seeing a lot of this in the news as much as it really is affecting everything around it. But artificial intelligence is driving massive data centers and energy draws off of the grid. A lot of this in the United States, but this is also globally. So Google looking ahead for this. This should be positive for them. Now, as far as the tariffs go, there's a couple of things I would like to point out. There's very clearly a friends club going on here. Now, if you're on the good list, such as Saudi, now they are driving oil down at the request of Trump. They're looking for a dividend now with some of their oil. Now, not coincidentally, they are also the royal family is offering a high-end Boeing jumbo jet nicknamed the Flying Palace. And there's a lot of talk about this. Now, this is from Qatar, that they're expected to issue this gift. Now, it's not set yet, but it looks as if that is probably going to happen. Now, we've also got emerging markets, emerging assets. They're gaining on hopes that the worst of the tariffs are over. Now, if you remember, all of the smaller countries, for instance, Vietnam, came in early and did early trade talks, so they are getting rewarded for this right now. So on the bad side of this, we've got and this is not being brought up a lot, but this could be the quash coming up soon. Secretary Bessent saying that the United States debt limit measures could run out in August. So what does this mean? This means, of course, they're going to have to raise their debt limit, but that also increases the possibility of a default. We'll talk a little bit more about that. First, let's go to the ECB. Now, they're on the bad list because they haven't come over and really done any negotiating with Trump. So they are going to have to cut their rates because they've got more inflation undershooting their target. They're in a spiral of deflation and they're fighting that right now. So they've got some problems they're going to have to address rather quickly here. We've also got Canada, if you remember, their new person in charge, Carney, kind of gave a little bit of backlash. And now they've got joblessness hitting 6.9% as tariffs are hitting their manufacturing. They're also getting hit with their main airline company, Air Canada, is now looking at selling out because with all of the Canadians dropping in their travel, they're now they're putting this business out because not a lot of support for them. Now, I want to turn to the kinetic wars for just a moment because this is really what is happening in the background. We've got India and Pakistan agreed to a ceasefire in United States mediated talks. Now, India was reportedly not very happy about this. However, they've got a brokered peace deal. Erdogan in Turkey has accepted Putin's request to host the Russian-Ukrainian talks. They are expected to have a bit of a ceasefire, or at least some good negotiations coming out of this. So it looks like a lot of things are looking up for this. So markets very positive this morning with all of this going on. Both of these combined did increase, did give that oil pricing a boost. Now I want to shift a little bit more to the background of this. Of course, this is all a push towards stable coins, which is the CBDC. Now with this, we've got Citi predicting this, that it's going to become a part of mainstream economy. Well, of course, they're predicting this because they're one of the ones setting it up. Along with the Federal Reserve, all of the big banks, they've been working very hard on this in the background, and they're very happy to announce that their plans are all coming into play. Now, keyed in with this, we've got United States fraud losses. This is the Government Accounting Office saying that stolen American identities, the losses could hit over $1 trillion. And they're saying all personally identifiable information is now available on the darknet for just $2. Now, we've spoken on this and addressed this prior to this, but the key here is that stolen identities are going to be used as a key point for pushing into the digital identities and putting these on the blockchain as well. So if you don't see the setup here coming, there's more stories like this floating out, as well as for the travel and the digital ID. All of these are tying together. So I want to address the debt a little bit more because this is a massive threat. These are two different stories, but they're tied in. This is the first. How an obscure bet on bonds almost crashed $29 trillion treasury market. This is the debt market. And this is coming from a Fed official talking about what they call the swap spread trade. So I'll go into this a little bit in a moment. But this trade nearly brought this down this last time that they had this massive spike in the treasuries. They're blaming it on this, saying it's kind of from an outside perspective. When if the Fed had not stepped in and purchased all of those treasuries, then there would have been a serious issue. A lot of that was also foreign entities dumping them all at once. So the underlying issue still runs in. Now, I want to bring up Greg did an excellent work on this, put it on a Substack. You probably have that already. I highly recommend reading this. Now, this is the second part of this. They're calling this a trendy financial tool for banks getting a new purpose. It's credit risk transfer. So this is really, in essence, the same thing. These credit default swaps that they are doing. Now, this specific story came off American Banker, and it is specifically relating to commercial real estate loans. But if you remember, we were speaking about this before, that this would be the crash, not of residential housing as it was in 2008, but in commercial. And we're starting to see this now. So this is the tick off. Commercial real estate loans, they are now these risk transfers. They're passing them back and forth for the banks as an asset when they're more like hot potatoes. Very similar to how they did this before. And this is the same thing they're talking about with the treasury market. With the debt, this is the federal debt. Now, they're doing the same thing with both. Either one of these could just be that match going into that pool of gasoline for that debt. So again, Greg put out that work, very much details what would happen after that. If you don't have that, I can post that for you. I'll probably post it in my next video. So with this, I wish you all a green trading day. It's looking to be green on the open. Continue at least throughout the day without any massive news to halt this. We're very headline driven, but it's looking massively good for now. It will not be able to sustain for the long term, but I wish you all a wonderful day. Not financial advice. Until I see you again, of course, stay free.